Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:50 p.m. on an absolutely beautiful evening here around the New York City, New Jersey waterfront. This is a strategic market update. Want to get people ready for what's coming next and offer a couple of my insights on possible market catalysts up and down that are around the corner. This session will be recorded, uploaded to the YouTube channel. Do spread the word that the Clueless Trading YouTube channel is available for anyone to access. Listen to all the valuable insights on the videocast, the precision broadcast, forecast that I do on markets as well as on individual stocks. And that's for all of you to preview at your own time, and also for any of your friends or colleagues to do the same. So certainly spread the word that Clueless Trading is available for them to review and, of course, join as a paid member. So on that note, let me begin. It's been a long evening for me. Certain family engagements certainly came up and to take care of it. And I apologize that I missed doing a live webinar. We shall certainly be doing one on Sunday evening. Okay. First of all, we are about to enter a pretty critical couple of days, if not a week to 10 days, and I need everyone to be prepared. I am going to kick off by showing you what the Vixen or the VIX, the volatility index, the fear index, whatever they call it, the vol index is going to be doing. My charts are generally very precise and accurate, and I'll certainly attempt to do the same on this broadcast. A couple of real important things here that are coming up. So let me just bring in the economic calendar. And of course, I'm going to mention a couple of the other events, big political events, economic and political events that are about to take place. We kick off next week with the standard stuff that comes out on Monday, which is nothing new. And then we have, the CPI. It's an important number because if it shows a very hot number on the consumer price inflation, that's a basket of consumer goods that they measure whether or not the economy is heating up too much. And if inflation is heating up too much, then obviously the Fed is going to be more biased towards raising rates in a rapid rate. So the markets wouldn't like that. So we need the consumer price index to be somewhat moderate, not low, but moderate. Then on Wednesday, we have the PPI, which is the producer price index, the cost of manufactured goods. I'm sorry, the raw materials, the producer price index. And that also needs to show some moderation. We don't need an overshoot, in which case the markets, the 10-year government bond yield is going to spike and all kinds of the same shenanigans are going to take place. All right. The Fed rate hike fears are going to come into play. And these are really, really important because the PPI number is coming out on the day, and this is the key thing, that we have the Fed meeting. All right, the Fed meeting at 2 p.m. FOMC forecast, and then after that, Chairman Powell, not Janet Yellen anymore, is going to be holding a press conference. And these are very critical because he's a new Fed chairman, and the press conference, he has to walk a tightrope between assuring global markets, the U.S. markets and the global markets, because this affects everybody. If U.S. rates are moving up too fast, it affects all kinds of emerging market debt, sovereign debt, because they pay back the debt. They borrow the money in dollars and they pay back in dollars. So if the rates are moving too high, the debt service costs are going to go higher, and that means their own those emerging markets, whether it be Turkey, which is one of the biggest ones, India, and all those other places, emerging markets, they are going to, and of course the South American emerging markets, commodity based, they are going to get hit because their currencies get devalued. They have to pay more to service the debt in U.S. dollars. All kinds of things, go wrong. Whichever they have to walk a very fine tightrope, the Chairman Powell, that he's going to be gradual in its rate hike, and that he does not see any sort of massive need to go out there and raise rates more than 4. The market expects about 3 rate hikes this year, but if he says he's going to he won't say it directly, but if he insinuates that he's going to raise it more than 4 times or something like that, trust me, the markets won't like it. So we have the FOMC meeting, the Fed meeting, and the rate announcement. Looks like they will raise rates 0.25 percentage points. I think that's baked into the market, but it's the guidance that they give and the communique that they publish, and then right after that is the press conference. Very critical day, Wednesday. All right. So after that, you have retail sales, jobless claims. These are standard numbers. The retail sales number does carry some prominence because if retail sales are slowing down, that means the U.S. consumer is starting to back off. Markets don't necessarily like that because more than 70% of U.S. gross domestic product is consumer spending. The U.S. is one big shopping mall. Even when you don't have, $50 or would like to say, 50 cents in your pocket, people are out there shopping with their credit cards, right? We're a credit-driven economy. That's just the way it is. So the retail sales number is very important. Then we wind down to Friday with industrial production, important number. We need to know that the U.S. economy is humming along. We have consumer sentiment, which is very important number because that also shows the propensity of the U.S. consumer to spend. So if you get a very low consumer sentiment number, that means all of a sudden it'll be a little shock to the system. Like, why is the U.S. consumer starting to get scared? So this is tied in with the retail sales number. And that's it. So next week is a very important week from an economic calendar standpoint. Now, the biggest things that are going to rock the markets back and forth, and that might kick off tomorrow, is something that we all know. And that is we have the G7 meeting in Quebec, in Canada. It's the 7 of the world's most powerful economies meeting there. And there's a little bit of a, family fight going on there at the dinner table, right? Between us and the rest of the world. Because the United States of America, under the Trump administration, right or wrong, is trying to basically push our agenda, America First agenda. There's nothing wrong with that. But if it's not done correctly and we go ahead and slap tariffs across the board, which we have started doing that to our allies, and these are our allies and our business partners, then we are not, the U.S. business community doesn't like it, neither does the stock markets. Right? And the stock market is betting that the Trump administration is going to cut a good deal with China and with Europe, and that things are not going to go out of control. But that is a big risk. So the G7 meeting is going to be contentious, and I'm sure good old Donald, my fellow New Yorker, is not going to be all softy and stuff. But hopefully he won't go too hardball, in which case the markets are going to freak out. All right. So that's the G7 meeting coming up. It's Saturday and Sunday, I believe, and I think goes into Monday. I'm not quite sure, but over the weekend we're going to get a lot of news. So if he gets into a little fist fight with the French and the Europeans and Germany and stuff, then it's not going to be very conducive to the markets. That's it, simple as that. Then we have on the 12th. Of July 12th? Yeah, July 12th. I'm losing track. We have the North Korea meeting, and that is in Singapore. So that's a very important meeting. That's nothing to do with next week, but still, it is July 12th, right? I'm thinking right. It's been a long day. So we are going to be, I'm going to just Google on the other side and find out. North Korea meeting. I'm just putting that in Google. The venue is a beautiful place, Sentosa Island. I don't know if any of you have been in Singapore. It's a little island state. It's only about 15 miles by something, but it's a very, very prosperous country. Very smart people. Great place to visit. And that is going to be, the summit is set for. I'm just checking it on my on my other screen. Okay, Island on June 12th. Okay. Ooh, that scared me. So I am completely off here. I do apologize. So this is going to be a serious week. So we got June 12th. So he's going to finish the G7 meeting over the weekend, and then he's flying all the way to Singapore, Sentosa Island. That's like, I guess, a little island off Singapore. I mean, it's like a teeny island, I guess. Singapore is a very fancy place. Lots of big money. It's a bit like the Dubai of Asia. And so anyway, he's flying out there and that's when he meets the North Korean premier, Kim Il Jung, if I'm pronouncing it correctly. Uh, and I was going to say Fat Man King Il Jung, so I do apologize with all due respect. I don't want him in the bad books of the North Korean leader. So it is going to be on June 12th. June 12th. So right after that, we got the Fed meeting and everything else that I've explained. So we got a heavy load coming up. All right. So on that note, be prepared. You got to keep in my opinion, you got to be keeping your position sizes smaller. You should be ready to react quicker, expect the unexpected, and that's where we come into the charts. Because without my charts, without these tactical precision charts, you guys might be a little bit lost if I can say with all due respect. So let's start off with the VIX. What's going on? All right. So with the VIX, this is where we are. And to me, it looks like the VIX is bottoming. And that means the VIX can easily pop up to 15 and even 17. And that means the market can fall easily 200 to 400 points. And we've been through that. So there's nothing new. Because structurally speaking, on a technical basis, the VIX right now there's a systematic selling of vol, right? And there was a news item saying that some of these hedge funds blew up here back when the VIX spiked big time in February, and then again here, but here especially where they were all shorting the VIX down here, and then when the VIX went nuts, they just blew up. So I'm not saying that's going to happen, but like I said, it seems here that when I hear that type of news that these guys are actually shorting the VIX at these low levels, well, that's a warning sign, because the VIX just moving up just a bit like that can blow up those funds. And guess what they do? Force institutional margin sellouts, the whole works. All of a sudden, you're in a great trade in a tech stock and it's down 15 bucks. You're scratching your head, looking around for news, like what's going on? Oh my God, what do you do? And nothing. They had to be, they have probably a position in that particular stock. Maybe they have 10,000 shares of a Google, whatever. That's a lot of money. They have to sell 2,000 of that to come up with the margin calls, because they're short vol or short volatility positions blowing up. That's standard procedure. Okay. You use your good solid positions, the big value stocks with the $500,000 type of ticket numbers, right? To sell, and use them as an ATM machine to go out there and cover your margin calls. It happens all the time. So to me, the VIX is starting to look like it's bottoming. And even, and at this point, I'm pretty certain, but sometime by next week, we're going to hit 1584. That's going to be a fantastic short trade, long VIX, short SPX, SPY trade. And we do that via puts. By now, my members know that. And even the new members and the free trial subscribers will listen to it. We do it very effectively. We generally get anywhere from 60 to 200. In some cases, we have made, it's already gone there. I mean, it's gone there. It's not that I made that full amount, but still 1,000% within a matter of 48 hours when these type of things happen, right? So even if you get the meat in the middle and you make 300-400% on a cheap SPY put or a moderately priced SPX put, you feel pretty damn good. You feel like you're a real trader for a change, and it changes the makeup of your portfolio, trading portfolio, and your P&L, and the makeup of your amygdala or your mental thought process and confidence. It builds your confidence. So anyway, getting away from the behavioral game theory stuff, the bottom line is at this point, we're looking, the VIX is looking like it's going to pop. Now, if the VIX is suppressed all the way down to 10, 97 or thereabouts, all the numbers are here. That means the market's good to go straight through 2,800 and head towards up mid 2,800s. And I doubt that's going to happen immediately on this run. I'll show those charts in a few minutes. So that's it. So the VIX, I think, is in a bottoming process. Looking at past patterns, we are looking at we are looking at so you just have to monitor this. And I show these charts a couple of times a day, but you got to do it on your end too. And if we see this candle building up, something like this, then you can rest assured that we're going to get a nice little pop. That means the market is going to fall. Remember, it's an inverse correlation to the overall market. So I started off the VIX by showing you what can go, the what can go wrong. And when the VIX pops, you're not sitting there going, oh, why did that happen? Why did everything fall apart? And it's all short-term falling apart. We're not in a bear market. We're going to go into a minor corrective phase, in my opinion, which is good for 200, 300, 400, even some cases 500 points. Don't get complacent. In trading, you never get complacent. The best and the best of the world's finest traders are always paranoid a little bit. That famous book by Andy Grove from Intel, who founded Intel, said that only the paranoid sleep or something like that. All right. I'm always paranoid about the market. Positive stress. Take stress, make it positive, make money off it. Okay, let's now move into charts. So I'm going to start off very quickly by showing you the short-term trading charts, which have worked very, very well. A bunch of our new free trial members are doing extremely well using these things. And you can see here it's pretty clear cut. This is the channel version, the consolidation channel version, double tops here. We shorted that very quickly this morning. Within minutes, that thing was almost 60%, then went into a double. And of course, by the end of the day, when the market pulled back, it went a little above that. Whichever the case, you can always trade these candles. I'm not going to get into the detailed analysis of how to trade these things. And for that, you got to sign up for the advanced coaching sessions. And I teach people hands-on on how to do it. So feel free to do that. And some of you have signed up, and it's going to be a fantastic experience for you. So, and the ones who have done the ACS coaching sessions or continue to do so, then they know very well how much I've helped people in managing their trades in volatile environments, or any type of environment for that matter. So these are clearly marked. You can see what's going on. This is a 15-minute intraday type of chart. All the patterns are put in place, and basically you just got to follow the channel and the candles. These big red lines are supports, obviously. The green lines are resistances. If you break out here, you're going to head towards 2800, and then it's going to fall back, retest it. Same old story over and over again. Rinse, repeat. All right, but I even put these arrows, which take a lot of my time. Believe me, I don't feel like putting them, but it does help a lot of people, because those are the points where you get those long tail hammer reversals, and then the market turns around. Lo and behold, I have multiple charts on the Twitter feed, which are constantly showing every 15 minutes, every half an hour, and every hour, that what the markets are doing, where you need to buy and sell and make money. And these are for active traders, and even for swing traders, but primarily for active traders, the 15-minute charts. The next 15-minute chart is a different variation of the same thing. We started off with the inverse head and shoulder, the big one. We shorted this part too, took a good portion of that. That was back on the 11th. I'm sorry, the 5th of June, the 5th of June. And then we are here. As you can clearly see here, markets do not ever go up in a straight line. There's a lot of traders who enter this business, or even some old line traders who are thinking, grandpa style, that, oh yeah, the market's just going to go up in a straight line. It never, ever does that. Okay? These are algorithmic high frequency trading dominated markets, controlled market. Black boxes know exactly what retail traders are doing, what hedge funds are doing, because all those are posted, in the matrix, and they will attack you right at those points. So nothing is in a straight line. These are within levels. They move back and forth. The patterns can be discerned pretty much sometimes at the time they're developing, whether it's an inverse head and shoulder, whether it's a double top. These things are evident, and that's the only reason why everybody should be at least trading off charts instead of their own emotions and thoughts, which I always say are worthless, which includes mine. I do have some strong opinions on certain things, but if I get too emotional trying to trade this, I know this is going to happen, and not look at the charts, believe me, I would be in a ditch, in a deep ditch, and all of you would be in a serious, you'd probably be in the bottom of the canyon. All right? So there we go. So at this point, you can see what's going on. This is the megaphone version. The lower end of the megaphone is 27.47. Do not be surprised if we fall 30 points to test that. That's about 30 points from here. and that 30 point is roughly 200 to 220 points on the Dow negative. That can happen within minutes, if not within an hour. All right. And I have a feeling, based on my, let's call it a tactical feeling, not an emotional feeling, that that is going to happen this coming week. All right. So this coming week, for reasons that I've already explained, you will have volatility. So this is these are big time money. These are good for in some cases 300% or so on the SPX puts and the SPY puts. So you got to make a good chunk of that. See a big candle fallouts, you got to get in there. These are very fast. They're 15-minute candles. So if you're too late, you're going to miss the trade. It's difficult for me sometimes. So I can imagine how difficult it is for others. But anyway, some of you are active traders, and you are fast enough and you make money. I know some of them you did, even some of our new members. So saying all that, if we do break out of this, this is still an inverse head and shoulder. You can see that. These are fast moving patterns because it's a 15-minute chart. So that's an inverse head and shoulder. It can come back. And if this inverse head and shoulder decides to break out over the neckline, that's 27.79, let's call it 27.80, then we are going to go higher. So let's take a look on the broader charts on zooming out, which is the next one, which is the hourly chart. Charts are your friends. The more you look at them, the more they talk to you. Make them your friends. And my type of tactical strategic charts, which are structured so you can be friends faster with them. How about that? If I showed you a naked chart of these candles just moving around without any structure, it's difficult for you all to make friends with them. You need to make friends with them. And if you make friends with them, you do better in trading volatile markets and make money. So this is the 1 hour chart. Clearly see here what's going on. I don't structure these charts, and draw them just randomly. I'm going to sit at my desk with my 12, with my 14 screens and say, okay, I'm just going to basically throw out a chart and draw a couple of no. Everything is thought out. Everything is very precise, and I use a lot of my brain cells that are left to provide this type of superior precision charting so that all of you can benefit from it. Because if you have a roadmap, it's easy to drive on the road, right? If you have a GPS, you don't get, you don't fall off the cliff because you know where the algos are to ambush you, right? That's what these tactical charts are all about. They are telling you where the algos are going to ambush you. So this is the 1 hour chart. The red line here is support 27.57. If we break that, there's going to be a red. I'm going to change this awful color and make it blue. Okay. So if we, if there's a red candle which expands below the support, you can rest assured we're going to fall rather quickly down here. And before that, we have another support line here. That was a hammer reversal from within the channel. As you can see here, this is still an uptrending channel. So if we break this uptrending channel, we're going to hit. This is a rising wedge. Look at that right there, right? So we're going to test the rising wedge at that point. That's exactly what the algos do. And trust me, you've seen how almost every day I show you that with these levels, and that's where the machines drive it to. Then they bounce from there. It's not magic. It's just that I structure it the right way, and you can literally trade off each one of these levels every day. So so there's your support. It breaks there, then it'll test 27.50. We break that, we're going to 27.39. That was the past reversal level just within the last 2 days, right? These are not difficult charts to understand, and you got to use investing.com or anything that's so clear. Look, I'm a simple guy. I like simple things, and if I look at a chart that I can see the colors, I can see the candles happening. I use Think or Swim. I use a very advanced platform charting, which is a quad. They use bar chart. So I use 3 different platforms primarily. But this is very, very simple. It's free, and you can make a lot of money trading off these things. Each of these candles are money in your pocket. So that's where we are. This is the hourly chart. If we wanted to, if things pan out strong, there is not a bar brawl at the G7, right? And some, people are not losing it out there, then we will just kind of vacillate. We can come down a little bit here, and then make a powerful move higher, what we call a breadth thrust, all the way breadth thrust. I've always said it's a very difficult word for me to pronounce. So, which is a high volume move like that, a breakout type of move. And you basically get up there. As I've said in many of my older videos, when a space shuttle or a rocket is launched, it has booster rockets, right? So in the case of markets and candles, the markets to break out somewhere, you need booster rockets, high volume, powerful moves, multiple sectors, all 10 sectors or so moving in tandem, and those are high breadth thrust days. So we might get one of them. This is an ascending triangle. You can see that right there, right there. So all kinds of different patterns are at play. And if we break out of that, there's a good chance that we are going to basically go and hit this level, because this is what we call the BK zone, not the bankrupt zone, but the bear kill zone, right? That's where the shorts get majorly squeezed. You've seen that happen repeatedly, and we just saw it happen just within the last couple of days. So that's your hourly chart zoomed out. It's all pointing towards 2800. If we manage to get and stay within this level and we break out of this ascending triangle, if we break below that, we got multiple levels of support. And if we break that, we don't necessarily, we're not going to fall into this pit at the 2674 level, which is those 600, 700 point type of days, unless something really catastrophic happens. All right. So follow these charts. This is the 1 hour. Next is the zoomed out version, which is the daily. I've constructed this to high degree of precision. They have come correct, I would say, with the 90% accuracy rate, not within the exact time frame that I might be thinking of, but even within the time frame, I've called them right. Things were looking terrible here on the 29th. The next day, we went long right off the break-even level. This magenta line is the break-even level for 2018. I called that shot. We had a hammer reversal. Next day we did this. Next day we had a sell-off. I believe it was 200 some points. Everyone freaking out. I basically said it's an inside day. Look through my videos. Look at my charts. I also noticed that it was a triangle formation. Things were getting oversold. I started to notice that we did have a positive divergence. That's called a positive divergence right there. These are not difficult stuff, guys, okay? And positive divergence as we were doing this. And lo and behold, the market took off. The bull flag remained intact. Of course, I look at almost 30 different indicators. I don't show all of them at any given time, but I was looking at many, many different things. I was using my macro, global, political, and economic analysis in my head, processing in my brain. And that's called the gut feeling. Not just gut feeling; those are quantifiable intangibles, making a deduction based on all the news and noise that's coming out as to what might happen. My analysis of it, and I was dead right. And then we had this big 1, 2, 3, 4 day power rally, and this is where we are today. We have a doji. You notice that these are powerful resistance levels. This is what the market broke apart. That was back on the 19th of March. And guess what? That's exactly where we went to. That is exactly where I said if we break out of the bull flag, we were going to go to. And along the way, we had other supply zones or big sell points where the market decided to break down 22nd of March. Each of them were taken out. This was taken out with a powerful move yesterday. And today we had this. This is still a bull flag. When this turns bearish engulfing red, if it does, and that can happen, then you can rest assured we're going to come back and retest each of these levels along the way. And even if things go really bad, then we can retest the lower end of this channel, which is what, 700-800 points lower. So this chart again is showing you the bigger picture of what might happen. If the market really wants to go higher, ignore a lot of the noise coming out of the G7 and all that stuff, And they're, because a lot of it is just noise. It's hot air. Donald tweeting, tough stuff. The Europeans talking tough stuff, and or the Canadians going, "What's going on here?" And all, we love America, and now they want to punish us on this and that. Canadians are like losing it with Trump is putting all these tariffs on them and stuff. They're like our second cousins, right? They're our first cousin. So bottom line is, the market decides that, okay, it's not going to really take shape. The trade war is not going to take shape. You can rest assured that we're going to head out to the upper channel, which again is around the 2800 level. Couple of quick flashes of, this is another fantastic chart, far structured. It's the hourly chart. You can see what happened today. Quick sell-off, tested the lower end of the channel. We're still holding the channel. We are within a band, with a trading band on the full stochastics, and everything is drawn out to perfection, meaning you can read them as, very easy to read, which helps you trade better. Active traders can use this chart to make very decent sums of money every single day. So this is the same 1 hour chart, but it's got the channel and everything put in place. Let's move on. Tesla, huge winner, huge. I drew this megaphone, I would say, weeks ago. Like, I believe it was the mid to late May. Look how exactly precise this was. It's mind-boggling. I drew this megaphone pattern. This chart's been in place. I've shown it a whole bunch of times. And guess where the stock went? And this is one version of the Tesla trading chart. It went exactly to the top of the megaphone. Man, you can't get any better than this, honestly. Honestly. You tell me, you show me other trading services who drew Tesla through this heavy volatility period, called it the day before the massive move, the 10% move, which took away $1 billion to $1.5 billion from the pocket of the shorts. You tell me other services who did this precisely on a consistent basis, but more so right here, where the stock was pulling back and I said, go ahead and buy it. That was 2 days ago. You show me other services that done that, I'll subscribe to them. I will. Now, how you traded the stock, what you didn't do, honestly speaking, is not really my concern. I am doing my job of showing you extremely powerful, precise moves on individual stocks and the markets. You have to decide what you need to do. So now we're here. There's a reset going on the 1 hour chart. So the stock will probably be a powerful buy somewhere around the 309, 310 level. Because like I said today, when it moved up, I had some of the 320s left, which zoomed up, and the stock went to 331, exactly there. I was pretty much out at that level. This is not a hope game. This is a structured game. This is a game of quantifiable risk. You measure it. You have to be disciplined. You're not going to feel good a lot of the times, but that's okay. Successful trading and profitable trading is not about a feel-good game. Oh, I'm feeling good. Like I said in my previous video, that's like the worst few words that you can ever tell yourself. Oh, I'm really feeling good. Before you know it, you'll be smashed. You always have to be on your toes. Of course you're going to feel good, because that not feeling good is going to transform into absolute pleasure of taking big profits. Pain before pleasure. And the pain is the tough part of buying these stocks at these levels. Not knowing what will happen, but the charts are telling you what can happen. The high probability trade, or even the low probability trade that delivers big time results. So anyway, this is a very precise chart, and you can see what's going on. If we do this, if we test here, or we might even test down here for all you know. Okay, down to the 300 level. Maybe there's some negative news. Maybe Tesla comes out and says, "Oh, we're going to raise $2 billion right now." So you told us you didn't need to raise any capital from the public markets. Guess what? It's going to go to 300. The bondholders are all going to buy that paper, and the stock will bounce. Okay, that's just the way it works. But before that, they're going to price it, and that the pricing is probably going to be at $300. I don't know what they're going to do, but that's how investment banks do. They pull the price down, they price it at that secondary offering at that level. The big guys, get the secondary offering before it comes out, and guess what? The stock bounces. They buy it cheap, they make money on that side. It's a win-win game for the ones, for the guys on the inside. So the big institutional players. So I don't know whether it's going to do a 300 type of move, but that's nothing. The stock's at 312. It can be at 300 in 2 minutes. That's Tesla. Whichever the case, this would be a fantastic buy zone. And in my opinion, if it doesn't do that and it decides to vacillate around 310 and then move higher, then the stock is going to go to 340. Remember, June is a very important month for Tesla because of the Model 3 production coming up. They got to keep up with it, and that's the big thing. Everyone's watching that. Whether he's going to keep up what he said, 5,000 cars or something a month. I don't know. I said that before in my video. I'll say it again. I don't even care about Teslas. I've driven Teslas. I don't like driving Teslas. I don't like the car. But it doesn't matter. I'm a trader. I trade the stock, and I trade the stock with extreme accuracy. Keep in mind, it's a volatile stock. Moves up and down. Look today. Went up to 331, pulled back, tried to move up. So the stock is, I believe, at one point, I believe is more than 30% shorted. You can imagine what happens when those shorts get squeezed. Maybe they laid down some more shorts here at the top of the megaphone, and then made themselves a good 14 points from here, right? Tried to salvage some of their losses. Okay. Couple of other quick charts. Roku, looking good. It's a long-term play. July calls, buy some common, whatever. Stock's looking good for this gap fill up here between 44 and 49. We know what the lower end of the game is, which is around 33. Manage your own trades. ULTA looking great. It's sniffing out a breakout. If this is the bear kill zone, if it breaks out over the 260 level or so, 265, the stock is going to go to 280. Again, another megaphone. Pattern 1 completion, which I drawn out weeks ago, happened. The first pattern was here. That was pattern 1 completion. Pattern 2, completion 2 is here. 3 is here. End of story. Learn to read the charts. Trade off the charts. Chipotle, doing fine. Little pullback here. We know what the channels are. If it breaks down, we know what to do. Everything is looking good so far. There's a gap fill. Obviously, there's going to be some back and fill at the gap fill. There is your current, the channels are right there. You can see it. There's nothing really to explain. If it breaks below the 430 level or so, or no, it breaks below, let's say, 440 or so, you're going to hit the lower end of this channel, which is around 432. Can't predict every single candle. This is a trade that has worked extremely well, all from 280. And at this point, it looks likely that it wants to get up towards this level and complete the full pattern symmetry, which is 503. Now, that's not going to happen tomorrow, but I believe it can happen by the end of the month. We have some really cheap lottos, but then we have some near-term calls too. We shall see. Just roll them out to July. And then finally back to the VIX. This VIX, you got to watch it all the time going forward, especially on heavy-duty event-driven weeks, a week that's coming up. Keep in mind, June 30th is the end of the second quarter. We're having a strong quarter. If the fund managers, the guys who get their bonuses on making their money, having a strong quarter, are going to, or Q2, which ends on June 30th, are going to do whatever it takes, called window dressing. We'll talk about it some other day. They're going to mark up stocks. In between, the middle of the month always gets dicey. So that pullback, in my opinion, if that theory works, which has worked over many years, then you are going to see a sharp pullback. It's a buyable one based on the charts that I showed, and then they will end the month on a strong note. Have a great evening. God bless you all. Thank you for listening.